We got HIM stock crashing, big tech releasing earnings, and my week 61 of my $100,000 challenge. Let's get into it. All right, I'm not here to waste your time, so let's get into it. HIM stock has been crashing this week. Huge earnings from big tech, and I'm going to go over my $100,000 challenge, week 61. Please give me a like and subscribe. I really appreciate it. So HIM stock is crashing. What's going on? The FTC and California and Utah both filed a lawsuit against Hims and Hers for deceptive and unlawful privacy practices, along with claiming that you get charged right away without seeing or talking to a provider, and it's hard to cancel your subscriptions and all of that. So now they have another lawsuit. You know, they just got over the Novo lawsuit. Now they have this lawsuit to deal with, and so the stock kind of went down. Will they win the lawsuit? Well, you know, first of all, there's a difference between winning a lawsuit and then settling with the lawsuit, right? So the reality of the settlement versus an actual victory, right? So if you actually have a settlement, Hims agrees to a fine, strict data monitoring without admitting fault, just to end it quickly, right? They pay money and submit to 20 years of federal audits. Now, if they really did nothing, absolutely nothing, and they are willing to just take this whole thing all the way, they'll prove that, you know, they did nothing bad, and legally it'll be great, but financially they'll be taking a pretty big hit. Now, the most likely outcome is a negotiated corporate settlement, because historically resulting in a multi-million-dollar fine, a court-enforced ban on sharing tracking data, and 20 years of mandatory audits, like we just said. The reason why is the overwhelming historical data shows that 90% of federal regulatory corporate lawsuits end in settlements rather than a full trial. This is 90% going to just be settled. So what will a settlement look like? So the financial penalties will be about, they expect to land between 15 and 30 million, so it's kind of a pretty big range. Again, permanent behavioral bans, legally blocked from utilizing third-party advertising like Meta and Snap to track user activity. And then mandatory business restructuring with the auto renewal. I think auto renewal, when you have medicine, it should be good, right? Like you should, if you wanted to refill your prescription at your local pharmacy, you call them and they could probably do it within the day. But Hims, they got to send it to you. So I think the auto renewal is okay. But claiming that cancellations is hard, okay. But I have a subscription with them. I'm a shareholder and a subscriber, and I have canceled some subscriptions and stuff and I was just like, no, it's okay. And it was right away. So that I think they got cleared up already. Now we got the peptides business issues, right? So the FDA, they just did their, they had this big meeting where the commission, they voted and gave a recommendation on whether peptides should be reclassified and then they can be compounded by pharmacies like Hims. Well, the panel voted 8-6, and specifically for BPC 157 and KPV, which are really big for Hims. So that's really good, but it is just a recommendation. If the FDA actually approves them, the financial impact for Hims would be transformative. Now, they did, recently pivot to Wegovy and Novo, right? So their margins have been lower. They're selling someone else's product. But once they have peptides, they'll be able to sell their own product, and their margins will be a lot higher. It will be cheaper to make or cheaper to have, and then they can sell it, and they can also control the price rather than having Novo control the price, right? I actually went to the doctors recently, and they had this up on the wall. Ask us about peptides. Very discreet for right now, right? Because it's not big yet. It's going to get there. And this is a holistic place, right? This is a holistic type of doctor. So, yeah, I trust them. Can't trust everybody, right? But I trust our doctor. We've been going there for a while. Hims and Hers is also hiring peptides people, right? So we got operations engineer, operations manager, project manager, site leader, operations director, all for peptides, right? So that's really good. They are releasing their earnings August 10th, so be ready for that. It's going to be a huge week, probably a crazy day for Hims. It's going to go up or down, most likely 10% or more. right? It's going to. Now for the stock market update. We had a lot of big tech earnings. This is the S&P 500. It's only down 1.5% since June 2nd, and it's up 18% since March 30th. But the NASDAQ is down 6% since June 2nd and up 22% since March 30th. So obviously bigger swings. We were so close to hitting a correction with the NASDAQ. The QQQ actually went over that 10% mark. It was down 10% from the high. The NASDAQ almost got there, but not quite. So it was very close. So it did not hit correction territory yet. But this is a big spot right here. Just keep this right here in mind. If we don't pass 26.5, if we can't pass this and we push back down here, you can probably expect a lower low, because we keep having lower lows and lower highs. So if this one pops up and it can't get past this mark, even 26.4 basically, right? If it gets past 26.4, then that seems better, but it's very possible it pushes down from here and then we hit another lower low, which then would put us in correction territory. This is the S&P 500. We had some big dogs, NVIDIA and Apple going down, AMD going down big for the week, right? But, Google and Microsoft going up, big swings. Meta, Amazon 15, right? I mean, look at these are big swings, right? We have a lot of earnings coming out. ServiceNow, 17%. Salesforce, 15% basic. I mean, these are some big numbers. It's earnings week, so expect some big swings. Right now, we have Amazon, Apple, Microsoft, and Meta. They all announced their earnings. So Amazon revenue rose about 20% to 200 billion, beating estimates. AWS cloud growth accelerated 37%. I don't know why I don't have that highlighted right now. This is one slide I forgot. 37%. That's huge. Their net income surged to 62 billion, but a lot of it was their Anthropic investment, right? So the stock jumped and Amazon's doing amazing. Apple revenue grew 16%. Gross margins hit a record of 50%. However, lower China sales and chip supply warnings sent the stock down. So Apple recorded okay earnings, but it actually went down. Microsoft, the revenue increased 18% to 90 billion. The Azure cloud revenue jumped 43%, finally crossing the $100 billion revenue over 12 months, and the Copilot reached 30 million paid seats. So strong demand lifted the stock about 8 to 9% at the time. And then Meta, revenue climbed on strong ad. However, they keep on spending money, AI CapEx. So it's caused their free cash flow to completely get wiped out, and so Meta has been going down, and it's all because of how much they're spending, right? So I graded most of these. I didn't grade Microsoft's because the way that they do it is a little weird. So I just didn't do theirs yet. But this is Amazon, as you can see. Great earnings. I give them an A+. The only thing that was wrong was their technology and infrastructure. That was up 25%, which usually, if this is a higher number, if one of their expenses is higher than your total, revenue, I'll technically put that in the red, but I didn't do it because their technology and infrastructure is actually helping them grow their revenue so much and grow these numbers, right? I mean, look, they had some other income that boosted their other income expense. So this is also a little bit, skewed somewhat, but they got an A+ on their income sheet. Apple, I give them an A-. Really, they had a decent, total net sales 16%. The total cost of sales was 11%, but their operating expenses was 22%. So that was a lot, and it was more than their net income. So that is the one for me. I was like, all right, I got to give you an A- for that one. Meta, revenue at 30%, but look at their expenses. Their expenses is off the charts, just off the charts. It is bad. I give them a D. And I hold Meta. It's a decent position in my challenge, my portfolio. So it's frustrating. We also had, because Federal Reserve, Kevin Warsh, they didn't raise rates. They didn't lower rates. They didn't do anything. And so there was, a lot of fear around it. You know, the Dow lost about 1,000 points, almost 2%. The NASDAQ lost about 1%. The yield spikes, hike fears renewed. Now everyone's thinking there's going to be more hikes. So, you know, it just got a little bit scared for a second, right? And look at what happened. This is him, right? The divided Fed holds interest rates steady despite stubborn inflation. Now, this is what happened. I mean, we were rising up. I mean, obviously we had the boom up, and it looks like we're already on our way down. But like, we're just, it was just not good. And this was to end the day, and then obviously we boosted back up. So, I mean, at the end of the day or at the end of the week, we're up, but the market didn't like it initially. So earnings for next week. We got some big ones. Palantir, Caterpillar, McDonald's, AMD, and SpaceX. That's going to be huge. Huge. AMD and SpaceX, that is huge. Palantir's huge. I mean, those are some big ones on Monday and Tuesday. Shopify is pretty big. SanDisk and Western Digital, big. For all of that's for like the NASDAQ right there, you know, and then Celsius, that's huge on my portfolio. So we got some pretty big earnings coming up, and I'm excited because I think there's going to be some good numbers. I think there's actually going to be some good numbers out of this. So I'm excited for it. Now for my $100,000 challenge, I'm at week 61. If you know what I've done, I'm trying to take $7,354. I deposit $50 a week, and I'm trying to turn it into $100,000. I'm doing it very as minimal and simple as I can to try to emulate what a normal person can do that is not caring as much about the stock market. And you can kind of just invest a little bit here, you know, $50 a week, and you're just putting it in every week and, you know, letting it ride. Now, I'm trying to not make too many moves because, again, most people are not making these kinds of moves. But the point is, I'm trying to turn that money into this. Now, there's a few stocks that have really hurt me, like HIMS. HIMS has been doing horrible. I mean, look at this 1 week performance. It's down 17%. You know, I mean, these are my top dogs right here. These top three, TQQQ, HIMS, and Celsius, which is why the next 2 weeks are going to be huge. Celsius is huge for me, and HIMS is going to be on the 10th. So those are some big stocks that I'm going to be having, and I don't know what's going to happen. Like I said, HIMS is going to move at least 10%. So Celsius could too. Celsius could move about, you know, at least 5%, but it could move up, you know, plus or minus 10%, depending on what investors feel about the earnings. I mean, I think it's going to be great, but you just never know. Amazon, Meta, Salesforce, ServiceNow, MU, and Netflix. I'm starting to build on my Netflix position. I'm up barely on that, but it's not too much of a position. Obviously, I would like to get most positions up to about $1,000 in terms of like about how much I've invested. So as you can see, Salesforce, I'm almost there. I have about $100, and then I'll be at about $1,000 invested. ServiceNow, I'm getting close. You know, I've gained about what, $55, so $610. So I got like $400 more for that. MU, I'm actually not going to probably, just because, you know, I don't know. I don't know about MU because I do want to build on Netflix because this is going to be a longer term play. MU is not as long of a term. Well, it's short term, more short term than it would be for Netflix, in my opinion. But I do believe in the stock. And it says value is 337, and I've only gained 37 off it. Yeah, so I haven't gained too much off it anymore. My initial buy, I only bought $50 of it, but it was at like $400. So that was great. But then I also bought some a piece of it at $1,200. So that's why I'm sitting at, you know, not too much of gains on that. So if we look at the weekly change, I'm up about 4%. My goal was about $12,500, but I'm about 22% away from that. Since June 2nd, 2025, I'm up about 33%. But if you take away all my $50 deposits, I'm actually down almost 17, 18%. So again, making these little investment, little deposits means something. Now you could say, well, if you didn't, you've lost some of that money. You've lost 15. Yeah, but I've gained more, so, right? 32% compared to that, that's at least still a 14% difference that I have gained on that. And I do feel confident that I will, the money I have invested, I invested at a time where, yes, the stock may go a little bit lower and it may be choppy, but eventually in the long term, it's going to be going up. You know, Meta has hurt me, Celsius has hurt me, and HIMS. Celsius and HIMS. Those two stocks have completely hurt me. If HIMS and Celsius were up just to the point, just being flat of where I started on June 2nd, I would be probably maybe at my goal or more. I'd be up there. I'd be up there because it was at like $52 for HIMS. So anyway, that's that though. I did invest $250 extra last week because I wanted to invest a little bit more into Celsius. I think this possibly could be the bottom. I thought $25 a year ago was a bottom. Clearly it wasn't. So yeah, I'm going to invest a little bit more into Celsius, and I might put that other half into something else here. So I did buy some Netflix and some ServiceNow as well this week. So as you can see, I did 50 and 50, and then I also did my contribution of $50 and then the 250 Mr. Evan Jones. Yeah, so basically I had a surplus of $200 going into the portfolio. So thank you for watching. Please give a like and subscribe if you are still watching. I really appreciate it. Yeah, the challenge isn't going. How can I say this? I expected the challenge to go somewhat like this because when I saw where HIMS was and other stocks that I was holding, I was like, God, maybe you could say I should have sold. I should have sold, right? Maybe I should have just sold. But my thought process was I don't want to be constantly in and out, in and out, in and out because normal people don't do that. So I wanted it to make it as relatable as possible for someone to just invest $50. You hold on to it. You just hold on to it. I did start this challenge at a time where HIMS was up about $52. So that's just that. I do believe it will be back at 52. I actually do believe it will hit 75 to 100 eventually, but that's, that's in the long term. So yeah, I do appreciate everyone watching. Thank you. Please give me a like and subscribe. I'm really trying to grow this channel, trying to do as much as I can while working, taking care of 2 kids, summertime. So, it's been crazy. But yeah, thanks for watching. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities. And you can count on compounded interest.